gorgeous little G81. I won't show you the front because it's pretty mangled, but I will talk to you about crypto. Hey everybody, and welcome to another episode of Driving with Mitch. I am in one of the new shop cars, which we are turning into a race car, a G81 M3 wagon with approximately 3,500 kilometers on the clock. It's basically a brand new car. I think it even has dealer tags on it. I won't show the number plate, but apparently this is a dealer tag. From one of my mates said, unfortunate that the thing was in an accident, but it's going to be a lot of fun as a track car. I don't think I've seen, well, it's the first ever wagon that BMW has made as an M3. It's a 2023 May build, I believe, and it's in my favorite color. If you've been following the channel for a while, you know I love blue cars. It's Portimao blue metallic. Really, really cool color. Last night was a big night for the markets, traditional and crypto. We had FOMC and CPI all announced. I think FOMC was at 4 a.m. and CPI was later last night. And the FOMC meeting is historically a meeting where the Fed, which is the body that controls interest rates in the United States and the world tends to follow, the Fed meetings generally set the mood for the markets, whether it's risk on or risk off on assets, whether they're high risk or low risk assets, crypto or traditional markets. And they've been hinting at a possible rate decrease for quite some time. However, it's still going to be pushed back a bit further. So right now, the market is basically predicting that we will see a 0.25% decrease on the Federal Reserve interest rate as of September, October this year. We'll see the next one towards December, and then the one after that we'll see in January, February of next year. All three of them are predicted to be a 0.25% decrease in interest rates. So roughly 0.75% between September, October, and January, February next year, which is not a huge amount. It's definitely not as much as markets would like, because when money is cheap, people buy risk assets. Risk assets go up, and crypto thrives on cheap money. So do traditional markets, but crypto especially. So big day yesterday, and if you didn't already catch on, the rate is currently paused, so there's no increases or decreases right now. It's currently paused in the US, as it is in Australia. Actually, I haven't been following the Australian rates very much, so last time I checked, we were paused, with potentials for decreases. I know that a lot of friends of mine are traditional business owners and are in Australia. I know that more and more invoices that are due are taking a lot longer to be paid. A lot of that stuff's blown out, 60, 90 days plus, whereas normally it's like 15 to 30 days. And generally, a lot of people are really struggling. Like in Australia, the cost of living has gone up a significant amount over the last 2 to 3 years. However, the wages are at the same levels that they were at in 2011, which is almost 13 years ago. Very, very crazy times that we're in. And the cost of buying property is astronomical. The property prices are continuing to go up and up and up and up, pushing a lot of people out of the market. So there is some positivity on the horizon. We will start to see potential rate decreases towards the end of this year, start of next year. So really looking forward to that. Thanks for all the messages and the comments about the last video I did about social media and how it's a black hole that people fall into. I've definitely been checking a lot less than I would normally be, and still finding it enjoyable to do so. Again, thank you for all the support, and I will see you in the next video.